Welcome to FOMO Consulting for your daily AMC stock analysis video on Sunday, July 4th. Ladies and gentlemen, I believe AMC will have a fireworks show next week, and I'll show you very shortly. And as always, the apes are winning, the diamond hands are winning, and most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I would appreciate the support. Let's get into the video. Thank you as always to each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you so very much. So as John Adams wrote to his wife Abigail on July 2nd, around the Declaration of Independence will be celebrated by succeeding generations as the great anniversary festival, and that the celebration should include pomp, parade, games, sports, guns, bells, bonfires, and illuminations from one end of this continent to the other. We are certainly celebrating the birthday of the United States of America. I hope you all have a wonderful time with your friends, your family, and loved ones. Always be safe, but I believe we will have pomp, parade, and illuminations next week with AMC. Broader market through Friday had a great day. Big tech, a lot of the blue chips had a great day to end the week. Russell was down. I'll show you why that was significant. So overall, crypto is having a nice little fireworks show today. Everything is generally green, up. Bitcoin, Ethereum, Doge, Litecoin, all up today. If you are in this, congratulations. Always fun to look at the pre-timing report, certainly showing a very bullish week next week. We will see how this plays out, always with a big old grain of salt. Well done, German apes. You closed the week 43.34 euros, down 5%. No big deal. We will recover, but you certainly had a good recovery at the end of the day. So the one thing a chart cannot tell is intent. So the iceberg report came out shortly thereafter, literally within minutes. 4 million shares were barred short, and they intended to use a scare tactic at the opening bell. As you can see, intent is not a chart pattern. Intent is scare tactics and manipulation. However, we did recover throughout the remainder of the trading day. We closed very, very strong at $51.96, down $2.28, down 4.2%. We had a fantastic run up after hours of 95 cents, up 1.83. So we recovered quite well, but as you can see below, the Russell 2000 chart sold off equally as well. We are very tied to that, as well as other ETFs. So overall, we mirrored that, no big deal. And as always, we were one of the more active, even on a lower volume week. So good to see, and certainly the most popular. So again, after hours had a nice little run up, very, very bullish going into the holiday weekend. Shows a lot of interest, a lot of positive sentiment. So congratulations. I am looking forward to a beautiful Tuesday. So let's look at the week in review. So obviously, the first 4 days were relatively flat. You know, we tested that $60, $61 level again, as you can see. But on Friday, again, intent cannot be overstated. The red line you see is the Friday close from the previous Friday. We closed at a little over $54. We closed at $51.96, even after all the volatility, the ups, the downs. We are only down $2 week over week. So everything in perspective, and as you can see from the horizontal red line, that was about the time that the iceberg report came out. The short shares minutes later were certainly used heavily. It was all just a tactic to scare you out of your shares before the weekend. So let's look at the overall time frame here on the 1 hour chart. Really for the last month, you can see we've relatively traded flat. We've traded in that channel. We've certainly been hovering above that $50 level. They know that $50 level, 51, whatever, is support. They tried to shake us out and press it down as hard as they possibly could. $60 level. As you can see, the channel we've been bouncing around in, and we recovered and it came back into that channel by a close. So I am personally not concerned about Friday's price action whatsoever. And if you look, we've spent the vast majority of our time over the last several weeks above the $55 price level, which I think is very important. With the after hours action that we saw, about a dollar, we're even closer to that. I believe we retake the $55 level, get back in our comfort zone. We'll attack that $60 level quite quickly. And if you look, the red line to me, just my own personal analysis, that $48, $49 is very, very strong support. I will personally be a little more concerned if we do break that $48 level and hold there, but I don't see that occurring right now. And on the bottom right, you can see where we are in completely oversold territory. I believe we are poised for a major, major bounce next week. And the MACD, as you can see on the 1 hour chart, is curling back around for a bullish crossover. So again, history repeats itself. Certainly intent is always at play. This is the Friday before the Memorial Day weekend. They certainly had the exact same intent by shorting this down very, very heavily. We opened at our highest point of 36.72. They dropped us all the way down to 24.50 on that very day. We did recover. Overall, no big deal, but you can see before the 3-day holiday, they wanted to ruin your holiday, make you think about it, take away the sentiment, the positive price movement. A lot of psychology behind this. I believe Tuesday will be a wonderful day. So I know some of you might be concerned about, we broke down below the pennant or flag, whatever you want to call it. Certainly feel free to pause this, but overall, breakouts need to have a conviction behind them, which means a heavy, heavy volume, a very large price spike. It's not just testing it and, holding it for an hour or two. It is truly a breakout, starting a new trend direction. Again, volume is a big part of that, and you need to have a volume spike to associate with that breakout. So again, you can see false breakout patterns when you wick down below them. Certainly not a trend. It is really more of a test. But overall, you do your own due diligence. I am not a financial advisor, and it's certainly not financial advice, but I'm just showing you the facts. So what I want to show you is going back several weeks on the 1 hour chart. If you look where I have the yellow arrow, so you've got an area where we were pressed down to $39.71 on June 10th. We got pressed below VWAP. You can see the alligator indicator is trending downward, open mouth bearish, but we did regain VWAP, got back on top of it. If you look at the RSI, we got pressed into oversold territory, very, very low at that level. If you look at the MACD, we were pressed downwards, obviously, and at that point, we started a bullish crossover or very close to it. And OBV at the bottom, you can see we were at that level, and where we've been holding ever since has been actually very bullish and very strong in my opinion, but we are certainly poised, I believe, for a breakout. So let's compare where we are today. So you can see those trend lines I've drawn kind of at the same level where we are today versus where we were past history. Again, we got pressed below the VWAP. We have now regained it. The alligator indicator, mouth wide open, going down, which is bearish. RSI was completely oversold. We have now bounced and starting a bullish uptick. You can see MACD was pressed down bearishly. We are now starting a bullish crossover, or very close to. And OBV is in a similar pattern, ready for a bounce and a bullish uptick. I believe that this pattern is somewhat repeating itself. I believe going into next week, in my personal opinion, if we do have a good Green Tuesday, it will follow this pattern closely. We shall see. So again, 2 hour chart, very dependable. One thing that gives me a lot of confidence is nowhere on these longer time frames, even on Friday, with as heavy shorting as we took with the manipulation, with the iceberg and all that, we never opened and closed below the $50 level. We certainly wicked below it. We got pressed below it. But if you look how hard that they have shorted this and sold it and all the selling pressure we've withstood over the last several weeks, the price still is relatively flat, which means we are winning. They cannot get this price down sustainably and hold it. Now, if we break down below, say, 48, we could go in, to the low 40s, possibly upper 30s for a time. I don't believe that's going to occur, but if you look at the RSI and the MACD, we could very well be poised for a crossover. RSI is certainly poised for a bounce, looking very bullish to me. But overall, just my personal opinion. So if you look, again, price is holding relatively flat. Yes, they pressed us down on Friday, but we recovered. This is the 2-hour chart again. We did not open or close below that $50 level. We wicked below it, but we are still holding strong at that level. RSI again, ready for a bullish bounce. And again, MACD is getting ready for that crossover, which again, this is all hidden bearish divergence. So again, longer time frame, daily chart, we're still in the pennant, no big deal. We're on the lower end of it, but I believe we could very well have a breakout this week. So again, you can see where we broke out on the 1-hour chart on the pennant, but I believe we will regain that. Again, like I said earlier, a true breakout, either bearish or bullish, has to be associated with heavy volume to really press you out of that trend. I believe this may very well be a fake out breakout, and we'll see what the next week brings. Overall, what I want you to see here is the daily chart. Again, alligator's mouth is still open, albeit he's just kind of chilling. The RSI is back close to neutral, and the MACD is still in a bearish direction, but a couple green days, we could definitely press that back into a bullish crossover. One thing, again, I can't reiterate this enough, that $50 level, $48 level, what have you, is absolutely key. If we got pressed down below that and closed a daily candle below 50, I'll be more concerned about a retracement of some sort. If we stay above the $50 level, open and close, more specifically close, I believe we are just fine. We are just in another level of support that we'll likely bounce from. GME had a heck of a day. Again, found itself being shorted at the open. I found some pretty steady consolidation and recovered quite nicely at the end of the day, closing at $202.61, down just a bit, but overall relatively flat day, certainly up after hours. I believe GME's brighter days are very, very soon to come. SEC, Justice Department charged hedge fund trader accused of using information about customer orders for personal gains. Go figure. So a lot of due diligence, a lot of speculation around the threshold security list and what that means for the upcoming trading week. Overall, this is the list most recently posted on Friday the 2nd. If you look through the list doing your own due diligence, the better part of these are actually funds and ETFs. To my knowledge, there's only 3 true stocks, including AMC, on this list, which I thought was quite interesting. A lot of these other ones are just ETF funds and what have you. So that was kind of a revelation to me personally. So let's go back in history. So probably one of the more manipulated stocks, more heavily documented stocks, was Overstock. And this letter goes all the way back to December 13, 2007. So always doing your due diligence. I know there's a lot of anticipation about what to expect with the threshold list and all the recent regulations, but Overstock, as of the time of this letter, spent 666 consecutive trading days on that list, which is ridiculous, but nonetheless, as you can see, Reg Show's been in place for quite some time. But overall, I want to take a look at a few things here. So kind of doing my own personal due diligence around the threshold list. Patrick Byrne, former CEO of Overstock, I would recommend watching this video around his personal revelation that naked shorting was occurring on Overstock. He wasn't a believer until he got on the phone with one particular individual, and he started doing his own due diligence over a period of months and found some pretty disturbing things. But I would recommend watching this video on YouTube to get a little better understanding. But this goes back all the way to 2012, this interview, so quite interesting. So let's look at the Ortex data going back that far for Overstock. So you can see the massive amount of FTDs, and the only thing you see is the price action, the borrowed share volume, and the FTDs. Going all the way back to July 19th, 2019, the massive amount of FTDs. Well, lo and behold, about 6 months after that huge spike, you see the big price run, right? And overall, if you look, it's eerily similar to the AMC chart. So let's look at the AMC. So again, going back to January, you can see the huge spike in FTDs. This is borrowed share volume and FTDs only. And again, we had the big price run, and it's a very eerily similar chart. So again, I wanted to go back and kind of look recent history and see how a few stocks actually performed after being put on this list, had some time to kind of settle out and see how they performed. So let's see how the stock responded. This is Levi. Red horizontal line is the date of the threshold security list report, June 1st. You can certainly see the price action increased substantially in April and early May, and then they started shorting it down. So let's look at how that responded to the FTD. See the FTDs, price ran up, a huge spike in FTDs. They shorted it down, another conglomeration of FTDs yet again, and then the price started to recover most recently in late June. So let's look at LDI, Loan Depot. So red horizontal line, date of report, you can certainly see price ran up. Then they began their shenanigans to short it back down. Price tried to recover, date of report, and it has kind of bled down ever since. So let's see how that correlates to the FTDs. You can certainly see price ran up, then they shorted it way down, as you can see. This is daily action, huge amount of FTDs. They probably settled some, and then they shorted it right back down. So let's look at QS. As you can see, price ran up, they shorted it right back down. Red horizontal line, date of report, threshold security, and then it's pretty well traded flat, as you can see. So let's look at the Ortex data. Failures to deliver, as you can see, after the price hike, shorted down, huge grouping of FTDs. Not so sure they've even been covered yet, but is what it is. But you have seen a couple price bumps. Overall, I'm not real confident or sure, quite frankly, around what to expect this upcoming week, other than fundamental catalysts such as the box office ticket sales. Obviously, a lot of positive sentiment, obviously a lot of excitement around AMC, social media excitement regarding, the threshold list. We'll see, every stock is differently, and obviously we know that there's a ton of FTDs out on AMC. As you can see very shortly, this is the on loan average for the short positions, and it has crept back up to 36 days. And as you can see, the FTDs, we're not real sure how many are out there. There's a lot of speculation, millions to billions. We shall see what the upcoming week brings. I am expecting a bullish week. I'm expecting a bullish Tuesday, but I'm also expecting for the shorts to hit us very hard at some point to try to obviously shake people out of their shares, hurt the sentiment of the stock and the apes and the diamond hands and the retail investor, but we'll see. So this is something I wanted to show you. So we all know who Jackson Hunter is. So this is on Social Sentiment IO, and we all know who Ihor Dusaneski is with S3. Both of these were quote unquote listed as negative posts, which I thought was interesting because we know no one's more positive than Mr. Hunter. So overall, it's interesting how the social media Sentiment is being corrupted as well. So when you see on StockTwits, Twitter, whatever you're looking to be trending, it's all about how it's tagged, right? And who's behind it. So again, don't get discouraged. It is certainly something noteworthy where I believe someone is behind the scenes, possibly twisting the sentiment. And as you can see, they always talk about those Reddit kids and everything else. It's clearly the largest amount of interest is in the 35 to 55 range. As you can clearly see, there's a huge sentiment in that, let's call it middle age category. But really, this whole movement around AMC, GME, call them meme stocks, whatever you want to call it, is certainly throughout all age groups, all demographics. We are all in this together, diamond hands to the end, right? And as you can see, the most important thing around this is the sentiment, right? So with AMC, the sentiment is, of course, always 60% bearish versus the sector average, which is more bullish. But if you notice how they list all of the Motley Fool, the Investor Police, Seeking Alpha, the writers, they're bloggers. They are not journalists. Very, very important to note. Bloggers, not journalists. And as always, fundamentally, the box office is rocking it this weekend. F9 as through yesterday, almost 450 million worldwide, up about 111 million domestically. No doubt this will continue to rise as the days go on, and a lot of great titles coming out very shortly. Short interest data, nothing has particularly changed, obviously, but we are 18% short interest. Nothing has changed. We'll see what goes on next week. So let's close with nothing more than happy 4th of July, each and every one of you. Independence Day. Happy birthday to the United States of America, and to each and every one of you, enjoy the holiday. So I hope you found this video informative and entertaining. As always, I want to thank you all for watching, and I hope your life is full of green candles, including Roman candles. Take care. Bye-bye.